Hello, hello. My name is Jacqueline Lane from Vericent, and we are back for another episode of What I Wish I Knew. At Vericent, we strive to have meaningful conversations on things that leaders and sales professionals, just like you, are passionate about and that you want to know more about. So today, in this episode of What I Wish I Knew, I am joined by Tom Davis, the Vice President of Sales Insurance at Open Symmetry. We're going to be talking about sales performance management as it pertains to insurance specifically. So, sales performance management being that next stage beyond accurate and on time incentive comp, things that include stuff like centralized and simplified data management, sales planning that is transparent and collaborative, and also this oversight of data and insights from a single source. So, Tom, within this lens, I have read that your superpower is the ability to align stakeholders to a united vision of increased capabilities, lower operating costs, and continual improvements in the producer experience in the insurance industry. Of course, that's a quote, but holy cow, I can't wait to hear all about this magical superpower.
Yeah,
Welcome, welcome. Thank you for
thank
being here.
you. Thank you for having me. So I would say that is more of an aspirational superpower for me. I've been at this for a long time. I've spent 20 years in the insurance compensation market, and I've been successful in having clients join me in that vision of reducing costs, increasing capabilities, making producers happier. But there have been many occasions where I've been unsuccessful. So if I am an insurance compensation superhero, I still have work to do.
Well, it's interesting. I just interviewed Superman last week and he felt the same way. So you're in good company.
Better to be humble. Better to be humble, right?
Right, exactly. So let's talk a little bit about what your world has been for the past 20 years. So you've been in the insurance industry. Tell me what makes it so complex.
Yeah, so I think the starting point for complexity in insurance is volume. And if we think about, mid-sized carriers, large carriers, you might see 10,000, 20,000, 100,000 plus producers that are all being compensated. And you're looking at the basis for that compensation being premium transactions from employer groups, from policyholders that, 3 million, 5 million, 10 million, 100 million in a large environment plus. So we're looking at an extremely high level of compensable transactions and a very, very high number of payees. And then factor in hierarchies. So insurance carriers are very familiar with the fact that rarely does a premium transaction pay one person.
Mhm.
Typically, these relationships, these hierarchical relationships, are 3 levels, 5 levels, 10 levels. So you're looking at your base transaction volume and you apply a factor of 3x, 5x, 10x to that on the basis of those hierarchies. Um, it's a volume problem. So the numbers get very big very fast. And now let's add on the fact that it's regulated. So carriers have to ensure that every producer is properly licensed and appointed and has clean background checks, etc.
Mhm.
There are rarely single data sources. There's typically multiple data sources all coming into the picture. Retroactivity is very common in insurance, where carriers don't find out about a hierarchy change or a writing agent ownership relationship change or other changes until 60, 90 or more days beyond, which means now we're going back in this high volume environment and having to do adjustments across these complex hierarchies. And I guess lastly, we're dealing with independent distribution. So these producers have a choice. So it's not like any other sales environment where your internal sales organization will sell your products and there may be frustration at times with compensation, but they're going to continue to sell your products. In this world, friction can lead to producers choosing to work with other carriers. And so I think that really increases the stakes.
Yeah, I hear you. And when you talk about complexity, I think we've all got stories where you deal with particular organizations and horror stories of paying 20, 25 people on one transaction or one sale. And it sounds like in the insurance business, it's actually more common for it to be like that than in a simpler design. Um, I mean, I suspect that there are things that are always going to be a tad mysterious to me, and I've just spent some time at my car garage and things that lawyers tell me, and also the world of the insurance company with their very own special dictionary and language. So you did talk a good bit about, and I'll ask you questions about um, how insurance companies um, evolve then. Like I think about the world that an insurance company sits in, and they have all these complexities. I would think that creates a reluctance to change, a reluctance to take risks. um, do you think that that is tied to this insurance industry's um, unwillingness or slow adoption or slower adoption of sales performance management, maybe than the tech space or different industries?
Yeah, I think when you think about sales performance management, it's typically a term that we would say don't use in insurance, right? That's not how insurance carriers think. That they're not built around process efficiency and training individuals how to better sell products and how to leverage KPIs and communicate about KPIs and change behaviors. It's typically more about paying transactional compensation and some level of supplemental or bonus compensation. So, I think those concepts are not necessarily near and dear to a lot of carriers, but I think they understand the potential value. And I think the reason they're not near and dear is because of this whole idea of the complexity and the sheer volume of what it is that they're doing. And so I think you end up with two schools of thought. You've got the carriers that say, we got our arms around the process. We're paying commissions. It's working. Our producers seem to be happy. We're accurate. We're on time. We're not getting a lot of complaints, and we're good with that. We can live with that. And then you have the other school of thought, which is, we would like to do more. We know that we could get some upside from doing more, but we really can't figure how that works in our operating environment. Our legacy platform it's difficult. It's time consuming. It's really not a practical, or maybe not even capable. It's not a practical exercise for us to really do much more than what we do today. And it's that sheer, it's the independent producer, potential impact on that independent producer deciding that, you've created friction and I'm not gonna work with you anymore. And so I think good enough is okay with some carriers. I do think that mindset is changing a bit, and we hope to be able to facilitate that to change even more quickly.
Well, you've mentioned the whole producer experience a number of times, and in all the conversations that I've had with different leaders in different industries, there's one resounding bit of feedback that I hear is that tech is never going to move as slowly as it's moving today. I read yesterday the artificial intelligence you're using today is the worst you're going to use for the rest of time because it's just going to get better. And so with that in mind, how sustainable is the status quo for insurance companies, especially when we talk about the fact that producers have choice and we talk about producer friction could mean that they're going to go somewhere else?
Yeah, I don't think it's a sustainable long-term position at all. I don't think that carriers can afford to simply say good enough is good enough.
Mm-hmm.
Competitors are embracing. There are insurance carriers out there that are embracing SPM. There's always going to be a need to introduce new products and to open new markets and to contract with new distribution channels. And I can tell you, I had a carrier relationship, and part of the discussion and sales cycle was, hey, there are a couple MGAs that are quite successful that we'd really like to get behind our products, but their hierarchies are so complex that we simply can't contract with them. So now we've got this large selling force out there in the field that we can't even conceive to work with because the platform won't support it. I think changing demographics in the producer world, younger producers, higher expectations. The Apple, Spotify, Netflix generation expects things to be easy. If you're a carrier whose idea of easy is emailing a somewhat attractive commission statement on a monthly basis, that's probably not going to win their hearts and minds. We talked about it, fragility of these older platforms. So another client that had multiple sales cycles in my vendor days, and the third year they popped up again. We said, well, what's different this time? We've spent a lot of time and you've never been able to move from the current situation. And the response was, well, our 24-hour payout cycle, which by the way is not a particularly good payout cycle, but our 24-hour payout cycle just turned into a 48-hour payout cycle, and we don't know why. So looking at that, they had lost developers. They had a very old platform. They had made numerous patches along the way. And now what drove them to make a decision, was this notion that, heck, this thing might blow up at any point in time. And that's a scary proposition. And so while it was happy news that they in fact had a compelling reason to move forward, I think from the carrier perspective, that's not the right time, right? It's not the right time to run an evaluation, to take your time to really look at the vendor marketplace, or to look at implementing a product in not just lift and shift, but let's look at implementing in a future state model. Let's look at trying to really elevate what it is we're doing today and put the right pieces in place to continue to elevate that. So that fragility is, I think, something that's really important to consider for carriers. Is there a point in time when you've done so much to your platform that your platform will no longer do anything for you? And I think the biggest thing for me is this opportunity cost, perspective that I have, which is your operating costs with legacy and outdated platforms will never be in line with your capabilities. You'll always have high operating costs and low capabilities, and you'd really rather shift that. If possible, wouldn't it be great to lower your operating costs, to be able to deploy some of those resources in other places, like elevating the producer experience, understanding more about what producers want. So the mantra that I live by is it's a win-win-win if you can increase your capabilities and lower your operating costs and make your producers more happy. And it is attainable, in my opinion.
Yeah. And so we've had a number of conversations, and I think the one thing that resonates is, the passion to create that win-win. I haven't ever heard the third win from you, but we're tacking it on now, but win-win-win.
I'm living here, Jacqueline. We're live. It's happened.
And I think too, it's a fundamental shift in how people are looking to solve problems, the urgency of how they're going to solve the problem, and the fear of changing or the fear of breaking something, outweighing the need or outweighing the interest in moving forward with something new. And so there's always this discussion about the cost. You're avoiding that operational cost by reducing the headcount and reducing the amount of support you need to pay on your legacy system. So there's always this cost component. I think if any of us have ever done a return on investment for clients, it's always that, right? So what kind of cost are we mitigating? And it's always a little harder to prove the positive that comes with it. So if we were to talk about the other side of the coin, so for some of those companies, forward-linking thinkers inside of insurance carriers, how they have approached sales performance management on a more proactive basis versus the, oh my goodness, it's about to blow up, let's lift and shift.
Right. Yep.
What have you seen looks great? Like what's an example of what great looks like with an optimized insurance carrier?
Yeah, I think the carriers are moving towards great. We're early adopters to recognizing that embracing SPM concepts, being more process driven and KPI driven, and being more communicative with producers and letting producers understand what they need to do to make more, and driving behaviors, which is what this is all about. Those carriers recognize right away that they could create a competitive advantage if they migrated to a modern platform. And so step one for those carriers was, recognition of this can be a competitive advantage instead of just a mundane business process that we feel like we have to do every week or day or month. The other thing is, I think they recognize that they don't have, and I don't like consulting speak, but I will use this term. They don't have to boil the ocean, and I never cared for that expression, but it applies here, right? Because if you're looking at a 20,000 producer environment, and you've now said we're going to move the needle, we're going to do more, we're going to introduce more strategic plans, we're going to drive growth, we're going to look at ways to improve business quality and persistency. We're going to improve margins. We're going to do all these things with this platform. That's a very tall task to do across a 20,000 producer population. So the carriers that I've seen successfully move have actually said, let's look at our tier one producers. Let's look at our top producers. Let's look at the top 10 or 20%, and let's do more for that particular group. Let's get more strategic in our plan design. Let's give them opportunities to make more money when they deserve to make more money for quality of business and quality of growth. Let's put different bonuses in place that reward them for doing the things that reward us. These are compatible goals. So let's do those kinds of things for the tier one producers. Let's create better visibility for them in our portals. Let's let them know where they stand at all times. Let's give them an elevated customer experience, if you will, so they can call in and get to somebody more quickly. So we do that for tier one, and we see the impact for tier one. And now we migrate maybe all of those strategies down to our tier two set. We may look at tier three and tier four producers as never really being able to migrate into that upper two tiers. So maybe we leave that alone. But in insurance, it's a 75, 25, 80, 20 rule where 20% of your producers are writing 80% of your business.
Yeah.
So I think carriers can't just look at it as saying, I've got 20,000 producers I need to address. It's a much smaller subset, and being creative and working with that group and building loyalties and doing more, I think will pay great dividends.
Yeah, I really love that idea of, and it's always my first instinct too, when it's a really large organization, and there's, maybe less propensity for risk, or maybe not even that. Maybe it's taking a small piece of the business and then feeling confident, ironing out all the wrinkles before you roll it out to the rest of the group. So I do love the idea of kind of showing a quicker win with a smaller group and your most productive group. So I think that's a really cool idea.
And just to build on that, legacy platforms don't typically provide the level of fine tuning to do that. So if you look at a modern SPM platform that can put together rating and ranking schemes and look at producer performance and a variety of key indicators, and create a report card or create a scorecard and really help carriers to identify those producers. Most carriers know, they know who the top folks are, but there are opportunities to really look at where we can build that. And within a modern SPM platform, that ranking scheme can say everybody sitting in my tier one, tier two is eligible for these 3 additional bonuses, gets an additional point every time they sell this product, and so forth. I'm simplifying it, but if you've got a system that's simply processing transactions somewhat semi-intelligently, you're not really able to be that nuanced. And so the high scalability of these platforms that are out today, the advanced capabilities that are in the platforms, the reporting, the analytics, the AI gives carriers a lot more insight, and more importantly, gives carriers a vehicle to actually do something about it. And that's different than operating in legacy land where, those kinds of things are challenging, difficult, maybe impossible.
Yeah, I remember another case that we talked about was, I think every organization ideally would like to know who their ideal customer profile is, their best performing, best margin products, highest volume products. So most leaders are able to get their hands on some of that information, but being able to pull data from a number of disparate systems that all impact sales and your producers, and pulling it in so you can start to have intelligent conversations about your best chances to win. Those are the kinds of things that predictive information and collective data that can start to make a difference on the positive side of the revenue lever versus just impacting the cost lever.
Yeah, and that's a great point. And that whole cost benefit analysis perspective of we're where we want to cost justify on the basis of reducing costs. We want to strip out inefficiencies, and we want to strip out overpayments, and that's how we're going to go get our approval. And as you pointed out through that last piece, that there's a revenue lever there that needs to be considered.
Absolutely. So we've talked a tremendous amount about what SPM is to insurance businesses, or isn't for that matter. So kind of the evolution of insurance companies into the SPM landscape. Since insurance is where you live and breathe at Open Symmetry, what would you say is some guidance you can give to any carriers listening or even producers listening in the last couple of minutes of this piece before we get to quick questions?
Yeah, I would say from the carrier perspective, I get it a lot, which is, wow, it really costs that much. So, you're like, yeah, it really does, because these are your sellers. This is where revenue comes in your door, and doing it right, it's not cheap. So I would say that this whole idea of looking at the business case, look at a revenue centric business case. Don't look at just a cost savings business case. Factor the revenue lever in. And if you take an optimistic perspective and you look at, how am I going to drive growth? How am I going to improve margins? How do I improve persistence? Are there things that we believe that we can do to make those changes, to make that kind of impact? If believing that and looking at that and putting together a business case that includes that, and then cut it in half, cut it down by 80%, you will still have a very compelling set of numbers to take to your key stakeholders to elevate the way they think about incentive compensation, or the way they should potentially be thinking about what sales performance management can do for an insurance carrier. So that would be my advice: is don't be afraid to pull on that revenue lever. Don't be afraid to point out that a 1 point move in any one of those metrics can be worth tens to hundreds of millions of dollars, and that's very difficult and challenging to go forward with. But if you cut it and cut it again and cut it again, and it still says $10 million, I think you've got a pretty compelling discussion to have with your stakeholders.
I love it. Through the conversations we've had, you've consistently shown that you're able to demonstrate value to your clients and really extract the positive implication on an organization's revenue and how SPM can do that. So I think that that's very cool. Thank you. No doubt you are, the local superpower hero.
Well, I'd like to think so.
I'm never going to let you live that one down.
It's worked out that way. The words can sometimes fall on deaf ears, but thank you for
it happens.
support.
So, Tom, I've got some quick questions. And I can't say I'm great at the quick part, because I always want to ask you other questions, but let's give it a whirl. Very first question: who would you say is a mentor that you look up to?
Yeah, so I have two. In my first software job many, many years ago, I worked for a CEO who convinced me to come down and move from Philadelphia to Birmingham, Alabama. And he indicated we would have fun and we would make money, and he would give me equity, and he would throw as much responsibility at me as he possibly could. And he did all of those things. And a quick story was, hey, we've got client A and they want to sign a contract, but they want multiple versions of the product and they want a discount. What should I do? His response was, I don't know. You tell me what you should do. That kind of thing. He was not afraid to let me fail. So I learned a lot from him. Our VP of sales in that same world was a very timeline-driven individual, green, yellow, red time, understood the importance of creating compelling events for clients. So those two absolutely changed my life. So those are my mentors.
Wow. I almost want to go back in time and work for those people. That sounds amazing.
Yeah, and they both went on to start multiple. We sold that company. They started multiple other companies, all of which were successful and sold. They were way ahead of their time.
Amazing. I told you I don't do very well with the quick questions. Okay. What would you say is one piece of advice for a new seller?
Be yourself, and that came from my mentor, the CEO, who traveled with me on a trip and said to me one day, "Hey, I really like the guy that you were when everybody came in the room and you shook hands and said hello and you asked where they were from and you were running a large meeting. And then you started to present and you turned into a different person. I didn't like that person." Uh,
Ah,
he said, "What you need to do is learn how to be yourself.
mhm.
You're kind of a funny guy. Use your sense of humor. You're going to be doing this for a long time. So don't be presentation Tom and real life Tom. Be real life Tom all the time."
I love that. Oh my goodness. That's awesome. Are you much of a reader or movie watcher? What is the last thing you read or the last movie you watched? Your choice.
I started college as an English major. So, yes, I do read a lot. And the last book I read was Demon Copperhead by Barbara Kingsolver, one of my favorite authors.
Very nice. I will have to write that one down. Um, so if someone could give you advice earlier in your career, what would it be other than be yourself?
I would say try not to take losing so poorly. So I could lose sleep for an entire week after finding out that I lost an opportunity to a competitor. I took it hard. Always went back and looked at every single thing we did. And I think there are times when you can look back and say, should have done this, could have done that. And then you should learn from that and move on. But for me, even if I did everything right, even if I felt like I did 90% of what was supposed to happen right, I still didn't feel right about it. I still carried that around for weeks and months at a time. So I would say do the best you can, learn from every lost deal, but let it go at some point.
Okay. Well, it sounds like you've learned a lot so far and taking the little nuggets that people leave for us, and often people leave those behind and forget that they happened. Um, as is the practice here at the What I Wish I Knew series. What do you, Tom Davis, wish that you knew more about?
Psychology. Yeah, I want to understand people. I want to understand what drives people to certain forms of good behavior and certain forms of bad behavior. So yeah, often questioning why people do the things that they do. So I would like to have a better grasp of psychology.
That is interesting. And actually, from the very first time I mentioned this to you a couple of weeks ago, that answer didn't veer far from it. So your question at that time, if you recall, is I want to know why people do the things they do, which is a very similar answer to what you
Head
just
scratcher. Some people are head scratchers for me.
You got it. Well, sir, it's been really informative. You know, the insurance industry is a complex one. And I think the first thing that I took away from this is that producers have choice, right? So, if one of your main levers for success has choice to go somewhere else, then I feel like there is urgency to take action sooner than later. The second is to understand the positive ability to impact your business through sales performance management, and to do that before it's urgent, so that you're not doing a lift and shift, but that's you can have the leisure to spend more time building something that makes sense for your future goals. And the third thing that I took away was sales performance management has the ability to impact your top producers, how much money they make, but it also impacts your own revenue lever. It also drives revenue, but protects revenue in that if you have a robust SPM solution in place, it enables you to stay more competitive. So those were three of my takeaways from today's conversation, although there are many more. I want to say a big hearty thank you to you. Thanks so much for being here today and participating in
All
our
right.
session.
Thank you. Appreciate the opportunity.
Amazing. Thanks, Tom. Hey, what do you wish you knew more about? It's right here. Follow us on LinkedIn for episode updates.